David Morgan, the Silver Guru. David, thank you so much for joining us today.
Well, thank you, Elijah. It's good to be with you.
All right. Now, the first topic I'd like to talk about is last week we saw a spike in precious metals amid the, stock market decline around the world. And it seems like precious metals are holding up still pretty well after the spike. What is your perspective on the spike we saw last week?
Well, it's slightly different. Obviously, gold was up about $30, which you certainly could say is a spike. And that was on a big down day in the Dow Jones Industrial Average. But silver didn't confirm it. And I'm a big believer in the confirmation theory, like the Dow theory. So I adhere to the Dow theory, which means that the industrials have to be confirmed by the transportation index. And I believe that silver has to confirm the gold move, and it really didn't. In fact, in a good move, if gold is up, let's say 2%, silver should be up 4 to 6%. So it should be double or triple what gold's move is. And that should carry through, which it hasn't really. It's been up, but not very much. I also look for the indexes like the HUI and the XAU to confirm the move as well. And again, I look for that to be 2 or 3 fold above the gold move. So again, if gold was a 2% move, I'd look for the HUI to be up like a 6%.
So what is this meaning for you then? It seems like maybe gold and silver are not off to the races?
I don't think so yet. I think we've got to wait and see. It's too hard. It's too early to tell, and I'm a bit conservative. And we've had these kind of false starts before, so I'm not ready to say this is it. It could be, but I want the market to prove it to me.
Now, as for the mining stocks as well, what do you see happening amid this short-term rise in the price we've seen?
Well, the higher beta stocks, those that are more volatile, have actually moved pretty well. And some of the stronger stocks have not been beaten up as much as the metal itself. So they're being resistive, which is very much a positive sign, but it doesn't guarantee it.
Beginning this interview, I noted that we saw stocks globally fall last week. The Dow is rebounding a bit today. This is Tuesday today. And we're seeing, do you think this is more of a dead cat bounce we're seeing right now?
I'm not sure. I mean, what we saw on Wednesday and Thursday was, pretty much the start of a waterfall decline. However, the action on Friday last week was a confirmation that may be all there is to this down move. And since that, we've seen, Monday, which was positive, and today as we're doing the interview, positive. So I'm not sure we're there yet. Certainly enough damage has been done to correct for a while and move on, maybe sideways for all markets, the stock market and the metals markets. That's kind of where I'm leaning right now.
Yeah, definitely. And what is your perspective on why we saw this decline last week? A lot of people were pointing to rising interest rates.
Well, there's always a word why, and it's impossible to really know because the fact is there's more sellers than buyers. And to know why, you'd have to, individually ask each and every, seller, why did you choose to sell today? Why I chose because of interest rates? Well, I chose because I needed the cash to make a second mortgage. I did it, there's a plethora of reasons. But if you want to try to zero in on one, the interest rate, the bond market, the debt markets, credit markets are the key. And with the rise in interest rates that we've seen, we're witnessing the beginning of the end, in my view. So whether this is it or not, I gave you my opinion. But overall, we've seen a basic change in the bond market structure after about a 40-year bull market. And it's just a hint, but the hint's pretty strong, which means that interest rates are moving up, obviously. And the flight to safety in the debacle of Wednesday and Thursday last week did not move money into the bond market, but instead it moved it into the gold market. So this is key to think about because stocks are negatively correlated to gold. And bonds and stocks are actually highly correlated at this point in time, believe it or not.
Right. And on the 10-year Treasury yield, we're seeing really a spike in the interest rate. It's at a 5-year high. How is this impacting the other markets?
Well, everything revolves around money. So, if you want to talk about manipulation, if you can manipulate the price of money instead of let the market determine what the price of money should be, i.e. the interest rate, then by definition, you have manipulated everything, because everything comes out based upon what the cost of money is, whether or not you buy real estate, whether or not you invest for the long term, short term, and immediate term, how much risk you're willing to take. If money's cheap, you're willing to take more risk than if it's expensive, and everything stems from that. So when we see this change, and it could be a sea change over time, where the cost of money is going to become more and more costly, then you'll see a lot of misallocation of capital quickly be repriced, or resets the common word now. So in a financial collapse, basically all the wealth stays in place, but almost everything gets repriced, and the market determines what the true value is at that time. We haven't seen it yet. We've seen it in 2008. And the repercussions. I mean, if you just Google, bankruptcies in 2008, or major corporation bankruptcies, 2008 financial crisis, you'll be surprised at how many entities failed during that financial crisis.
Definitely. And a lot of people I was talking to were also pointing to the idea that, these rising interest rates it could, really impact the stock market, because some of the reason people argue, why the stock market has been rising so much. One of the reasons is because of stock buybacks, corporate stock buybacks. But these rising interest rates, then it's not as profitable for companies to buy back their stocks, essentially, because, they can either, if they have extra cash, just invest it elsewhere, or, if they're borrowing money to purchase stocks, then, that dividend on the stock compared to the interest rate is not very profitable anymore.
Exactly right. I mean, it goes back to, what we're discussing, the price of money. And so if money is really, precious commodity, which of course, if you look at it in terms of gold and silver being money and everything else being credit, we're in a situation where it's being repriced. And if it's repriced, then everything gets repriced. The question really becomes, how big of a repricing of money are we going to see? Are we going to see, the short-term rate at 5%, 6%, whatever? And if you go back in, my youth, I mean, we saw interest rates near 20% after Paul Volcker took over as head of the Federal Reserve. And at that time, I thought it was impossible to keep rates that high and sustain them, but I was wrong. They actually, the United States weathered the storm, but it had a much stronger economy at that time. Another way to look at it, a few people bring up, but that's, the cost of borrowing, not in terms of interest rates, but the cost of borrowing in terms of productivity. So if you have to borrow $1 and you get $2 worth of productivity, you're an intelligent borrower. But if you have to borrow $5 to get $1 worth of productivity, which is roughly where we're at, that is absolutely insane. And yet that's what we've been doing for a long time. You cannot borrow yourself rich. You cannot do these things. And yet, and I'm not saying that anyone really believes it. I think even the Keynesians have an idea that it isn't working, but they don't know what else to do. Their challenge is to come out of their box and say, Keynesian economics, whenever there's a recession, expand the credit cycle, expand credit, that will take care of it. It doesn't work. So they could try expanding credit. They might lower interest rates from here, but who knows? Whatever they do, it's my strong opinion / studied view that we're nearing the end, that whatever measures they take really will have less and less and less effect. I mean, you go back to QE1, QE2, QE3, Operation Twist, all these little practices that they put on to try and control the economy, when the economy really cannot be controlled in the longer term. I know I'll probably get some negative comments from the trolls on that, but the long-term perspective is markets tend to be free in the long term, meaning that the repricing I talked about earlier will take place, and it's exacerbated because of trying to control it. In other words, if it was truly a free market, most prices would be priced according to the real law of supply and demand rather than some central authority telling you what the supply and demand should be.
Definitely. And a lot of people I've been talking to also have been saying that, it looks like we might be at the beginning of the end, or at least this next crash that we're going to have. The stock market is in for a big correction, kind of like we've seen in the past, like in 2008 and 2000, where we saw the stock market, go, 50% in half or more. Is that what you're seeing? Is when you say we're at the beginning of the end, are we going to see a correction of 50%
I believe
or more?
we'll see that type of correction, whether it's now or not. I don't know. I tend to think not yet, but I don't want to stay consistent. I mean, I'm looking for more trading, and I think I'm leaning toward more to the downside. I think by the end of November 2018, so we're only looking at 6 weeks from now, we'll have a pretty good idea. If we have fallen another 5% in the stock market by the end of November of this year, then we have basically a 10% correction, and meaning what we had last week added on to another 5%. I want to be clear. If that takes place, then I think that's enough momentum to the downside that, we're pretty much on our way. But, I don't know the future. I tend to think that could happen, but I have to wait and see.
Last time we had you on, you were talking about how a lot of people in our space were talking about silver shortage, but your opinion was there is none right now. Can you give us an update on this?
Well, it's a rather touchy subject. I mean, I think the easiest, most understandable way to understand whether or not there was a shortage in silver, and I'm talking silver, the commodity, not coins, bars, or any investment grade silver, is whether or not the stockpile of above ground silver is increasing or decreasing. So we had a deficit from 1990 to 2006. 15 years, the stockpile went from 2 billion ounces to 500 million. 1.5 billion ounces were taken out of the above ground supply and depleted it. From that point, 2006 till now, the above ground inventory has gone from 500 million ounces to about 2.5 billion ounces. So it has increased overall. Now, that doesn't say who owns it, how tightly held it is, if it's investment purposes, if it's warehouse for industry. It doesn't tell you any of those things. What it tells you is whether or not the silver supply has increased or not, and it has. Now, if you look at the Silver Institute, they'll tell you that there's been a deficit in silver, and what they mean is, by their calculation and their methodology, they're correct. There's been a demand that is at the margin, investment demand, which is greater than the amount mined and recycled in a given year, which creates a deficit. But that silver's still above ground, so it could be sold back. So depending on, I want to mix words, but I want to be clear. So I think the best way is what I said. We have increased. So when we had this problem with the mint, it was easily corrected. And basically, the amount of Silver Eagles purchased in 2018 is pitifully small relative to what it's been, after the 2008 crisis. I mean, went from an average of 10 billion ounces a year to 20 to 30 to 40 million ounces a year. And now we're back probably going to be under 20 million this year. So it's fallen off quite a bit. And the mint basically has overcapacity right now. I mean, if they only sell 20 million ounces this year and they're capable of producing 40 million ounces, what does that tell you? Well, it tells you that investment demand for Eagles at least is off. And I'll look you in the eye and say it's demand for silver physically is off quite a bit. I don't know how much has gone into the cryptos, but a measurable amount. A lot of people have just given up. I mean, a lot of people that are young and, think outside the box were silver investors, and old people too. I mean, it's all people really, but It's a very small market, not understood by most. And those that are inclined to look for quick gains look to silver, and they do not materialize. They're eager to go ahead and take a loss on their silver position and maybe move into cryptocurrency. And that took place for a few years here. So now we're at a point where, with the financial system, as described during this interview, I think you'll see more money coming back into the metals.
Definitely. And I know we've discussed it a couple times before, and if you could give an update on this point as well. The COT report, I was talking with you about this. Some of the commercials are going long silver, having net long positions. And it seems like, and also for gold, and it seems like there must be a reason why they're doing that, right? So looking forward, this actually seems to be a bullish sign for precious metals. What does the COT report say right now?
Well, I haven't checked last week. I usually update the COT for our premium members about once a month. I do pay attention to it, and it is important. The problem with it is people get very excited once they understand how to read it, and they tend to overuse it as a timing mechanism, which it's really not that good at timing. But as you said, this is the first time that I can recall in a very long time where the commercial interests are net long silver. At least they were recently. I don't, again, remember, I didn't look at last week's report yet. But this is a bullish sign, a very bullish sign. Yet, with all that said, nothing's really happening in silver. I mean, gold had that one good day and it's adding on to that, excuse me, slightly. Silver's creeping up little by little. I mean, we're probably going to get over 15 here shortly. But you got to remember, I mean, this year, gold was breaking out the 1350 level, and we're, more than $100 from that level right now. And that's kind of a breakout point. If you want to get super technical, it's 1360. But so there's really no timeline. I mean, these are price targets irrespective of time. So to really be back at a market that's fully bull market, we want to see silver above the 17 level, confirmed by gold above the 1350 level. And we want to see, good trading in those ranges and higher. Once that's established, I think we're on our way. It doesn't mean the market wouldn't continue to go up and down. It will.
Definitely. And I guess for those investors, you were talking about how a lot of people, came into gold and silver earlier, and then they haven't been doing anything for so long that they went into, cryptocurrencies and rode that train. So what do you say to those investors who are just, really discouraged right now, and still holding on to their precious metals?
Don't leave 5 minutes before the miracle. I mean, honestly, if you've gone this far, you may as well go all the way. I don't think we have much longer to wait. I don't want to sound contradictory to the beginning of this interview, but whether we have to wait another, to the end of November or until, first quarter 2019 really doesn't make much difference. And I'm not saying that's the magic point either. The fundamentals are so strong, and the technicals, that this is an unloved, misunderstood market that no one's paying attention to. And that's the time you want to be a buyer. You want to buy when no one wants to buy it. And outside of the Silver Eagle program that had a big rush when silver got clobbered. But think about it. We had this big rush, it got on the news, there's a silver shortage, they can't make any more Eagles the rest of the year, and a lot of stuff you hear on the internet, which was exactly true. The market got satisfied pretty easily, and the price really hasn't moved up, or not substantially anyhow. So there is enough supply at the current demand physically to meet everyone's needs, but it can shift. And I don't want to discourage anybody. What most people don't really seem to get is how small the silver market really is. It doesn't take many new buyers for silver to start moving substantially higher.
Definitely. Like, how many buyers do you think there would need to be to enter the market for it to move substantially higher?
A quantity type of thing, or let me rephrase that. It's more quality or how many. It's not so much how many buyers, but how much demand. So let's just look at, one of my earlier videos. You can Google it, myths in the silver market. I said, look, if everybody in the United States owned a little silver, you're looking at 700 million ounces for the population, each owning 2 ounces of silver. 2 ounces of silver is $30, or roughly that amount. which is really not very much money in cash terms. And that would eat up the entire supply of above ground silver on an annual basis, or nearly so. And yet, that's only 5% of the world's population. So that's a very small amount of money into the silver or into that market, the silver market, to move it to an astronomical high. I mean, let's just say that investment demand went from 100 million ounces to 700 million ounces. That would move the market into probably territory we've never seen before. And that is only everyone in the U.S. owning a little silver. So it's a very small market. It's just that most people don't ever get taught about the economic system, the money, what money is, why it's important, why gold and silver are basically God's money or natural money or obey natural law, and why it's important to own it. And a lot of people that do get the message kind of overindulge in it and think that's the only thing you should own, or that's, why would I own anything else, and become their own central bank and all that. And I'm not against any of that. Look, I'm free market, but you really need to be balanced. You need to be balanced in the way you approach markets, generally speaking, across the board. And that goes for my friends in the crypto space. You don't want to put too much in. And I'm just telling one of my compatriots here recently that, there's people out there right now that probably bought Bitcoin at, 12,000, probably got a second mortgage on their house for $12,000, and they bought one Bitcoin, and now it's worth approximately $6,000, and they got to make that interest payment on their second mortgage to fund their Bitcoin purchase. You get the idea. You might be careful when you invest. Most people are really better off to live within their means and have savings and put the savings into the metals, but not all of it. I'd say conservative. If you don't know what you're doing or you're just getting started, maybe it depends on the person, obviously, but maybe a 50-50 split. I mean, if you're saving, let's say you're lucky enough to live within your means and save 10% of your salary. So you take that 10%, maybe allocate 5% in the metals and 5% just into cash. I know I've bashed the fiat system and cash, generally speaking, but it is the safest asset class outside the metals for the longer term. It's physical. I'm talking physical, pieces of paper.
Definitely. And getting back to what you were saying before about if everyone owned just 2 ounces of silver, that would eat up pretty much all the supply, right?
Yeah.
Right. Only everyone in the United States. Yeah. And so kind of getting into that, a lot of people say, well, something is in bubble territory when you're just hearing about it all over the place. It becomes mainstream and stuff like that. Do you see that's where precious metals are going to get eventually?
Well, I haven't altered my opinion. I have this opinion still, and I was there for the first bull market, as you well know, Elijah, and I watched it accelerate from silver was at about $6 in January 1979, and a year later it hit $50 intraday. So it went up 800% in a year. And gold was roughly 300, maybe 250 to 800. So it went up about 4 times or so, 3.5 in a year. So I saw the cover of Newsweek. I saw the channels. I knew a commodity broker that at her lunchtime, she would lock the door on her office, go to the coin dealer, buy gold coins, and mark them up and sell them on the street because people didn't know where to get it. And she was making, I don't know, $1,000, $2,000 cash, every lunchtime just by selling gold coins out in front of her office. I mean, it's, this is the thing that happens at the top of the market. That was pre-internet. That was before any newsletter writer had the access that we have now to the world. I think this time around, it could be very similar to that, or maybe even greater. The problem with the silver market is it's not accessible to hardly anyone outside of the United States, Canada, and Mexico. To buy silver in Europe is very, very difficult, and they penalize you with the value-added tax. Buying silver in Asia is very difficult. One of the people that translates the Morgan Report into Mandarin is a coin dealer. And there's just really it's great difficulties to buy, even so much silver coming out of Peru and Chile, Argentina. You'd think it'd be very easy to buy silver, but you can't. It's very, very difficult. So if the access to silver was equal to the access of gold, I think you'd have a far greater physical demand for silver than you have now. But most people don't discuss these things or even are aware of them. That has been mitigated somewhat by accounts that are set up in, let's say, Singapore or some places in Europe where you could take foreign capital and buy silver and have it stored and not have to pay the value-added tax. These are rather cumbersome processes. People do take advantage of them, but not to the level that you would expect. It's very interesting being a silver bug, obviously, how much more difficult it is in many places in the world to obtain silver than it is to obtain gold.
Now, do you see that changing even more? You're saying it's a little bit easier now, but still, I mean, most people aren't going to set up an account in a different country and stuff like that, So is it, as we see this bull market progress, do you think it's going to be open more to the general public?
No, I think what could happen is you'd have more access to the black market. So let's say someone that's in Europe that bought silver today and paid the VAT on it and owns it physically in their basement, for a corny example. I'm sure the trolls will love that, the conspiracy thing. So those people might come out and say, you know what, I want to pay off my house. I'm going to sell this, these 10-ounce bars for the going price in Europe less, maybe half the VAT, and take that and whatever. So I think, as the price goes higher, more comes out in the market. And so that's what I would think would happen. But as far as, getting rid of some of this VAT regulation or make it more, easily obtained, I doubt it. In fact, it might go even the other way. But there's always a free market at some level, which means what I just said. People that have a pretty good stash that decide they might want to sell part of it, might want to sell it, publicly, more or less publicly, and, make their own bid and offer.
Definitely. And I mean, how will that, when we see that, and how will all these regulations impact the price then? If people are wanting to buy precious metals but really don't have the opportunity to?
Well, this is just conjecture, but it just depends, how frothy the market gets and how much demand and what's happening at the time. If there's a currency crisis going on where people think that their currency is failing or the dollar's failing or the banks are going to close, you've got a panic mode then, and you've got fear driving the market. In that case, the sky's the limit. People could pretty much charge over, spot price in the VAT. People will be so, inclined to protect themselves. On the other hand, if it's just a market move that's pretty orderly and getting frothy and it's more of momentum and things are going up every day and it can't last forever, just like the end of last year in Bitcoin. It was a parabolic move. I knew it was going to end. I didn't know 19,000 was the number, but I knew by the curve, I knew by the graph, it wasn't long for this world. You don't get a parabolic move that goes very long in time. It does in price. So I don't want to be unclear, but in fact, I'm trying to be very clear. So if it's panic, fear-driven, sky's the limit. If it's just a momentum move, then there will be a spread closer to the actual paper price, I suppose. And I guess should address that as well. Could the physical price disconnect from the paper price? And the answer is yes, it already has. So in either one of those scenarios, you could see where the physical on the street price for silver being much different than what's on the exchanges.
All right. Well, David Morgan, thank you so much for your time today.